The price volume trend indicator is a powerful tool for confirming trends and spotting potential reversals. It's very useful to identify volatility and trend divergences that signal potential market changes. It is a must-know tool for day trader, swing trader, and scalping trader. In this video, we will take you step by step to understand how to use price volume trend properly to make profit. Without further ado, let's go into the video. First, let's add the indicator to the chart. And I use TradingView for charting, and if you want to use the same, you can use the link in the description. We can click the indicator tabs and search for price volume trend. Select this one made by Everget. Now as you can see, it has two lines. This one is PVT line, which is used to identify the trend is bullish or bearish. Also can be used to identify reversal points, which I will talk about it later. When PVT line is green and going upward, which mean a bullish trend. On the opposite, when PVT line is red and going downward, which means a bearish trend. To here, you might think. But how do I know the PVT line will going upward or going downward in real trade? Well, this is why this signal line come into play. Basically, this signal line is the simple moving average of PVT line. When PVT line cross over the signal line, which means it has a high chance to going upward. On the opposite, when PVT line cross under the signal line, which means it has a high chance to going downward. And pay attention here because it is very important. Most people will tell you to enter the trade on the cross points, but it is not going to work. As you can see, it actually will generate a lot of false signals. So here I will teach you two ways to properly use this indicator. And before that, if you like this type of video, which sharing about trading technique and indicator setup, make sure you like and subscribe. Okay, back to the video. The first way to use it is to combine with volume and supply demand zone. If you don't know what is supply and demand zone, you can check my bot trading course. Okay. So the way it works is like this. First, you need to add volume to your chart. Click the indicator and type in volume and add it to the chart. And let's see this example. In this example, it happened three things. First, the PVT line upper crossed the signal line, which means it might be a potential reversal points. Second, the volume is green and above its moving average, which is this white line. It indicates the reversal momentum is quite strong. Third, the price hit the demand zone and bounced back. It further confirmed the reversal point is strong enough. In this example, we know it has a strong chance to keep raising, and the probability is on our favor, so we take the trade. And we place our stop loss under the swing low to create a good buffer for our position. Also, we place our take profit with a 2-to-1 risk-reward ratio. In this example, we success take the full profit. During the position open, there are some things need to pay attention. And I will tell you in this short example. In this short example, we see the PVT line undercross the signal line, which indicate a potential reversal point. And we also see the volume is red and break out the moving average, which mean the momentum is strong enough. Also, we see the price just bounce out the supply zone, which also further verify the strength of the reversal. So we know it has a high probability as a winning trade, so we enter the trade at the closing price point. And pay attention here, during the trade. The PVT line cross back the signal line, which mean the momentum start to decrease. And we're the wise trader, so we know we better close the position here. Even the profit is not that much. And here is the second example, which is quite important. Let me show you. First, we need to open indicator tabs and searching for 10 in 1 different moving averages. Add this one to the chart. Second, we need to adjust the setting to create 3 EMA with 30, 50, and 100 period and different color. As we can see, when the moving average lines arrange like this, red on the top, green on the middle, and yellow on the bottom. Also, the price is above the red line, which means a bullish trend. On the opposite, when the moving average lines arrange like this, red on the bottom, green on the middle, and yellow on the top, which means a bearish trend. And here is the setup. For a long trade, we need to see a PVT line upper cross, and the moving average lines also in a bullish trend arrangement. And here's the example. The PVT line happen to upper cross, which means a potential reversal points. And the moving average lines also in a bullish trend arrangement, and the closing price is above red line. So we place our stop loss below the swing low to give our position a great buffer, and place our take profit with a 2-to-1 risk-reward ratio. As we mentioned earlier, when the PVT line cross back, we better close our position. Or even the trend is quite strong like this example. We still need to close at least 50% of our position to reduce the risk and move our stop loss the break even. Let's do a quick recap. First, we know how to use PVT line to identify trend and reversal by observe the color and direction. Second, we know how to use PVT line plus signal line to identify potential entry points by observe cross points. Third, we know how to use price volume trend indicator to combine with other trading technique to create our strategy, like volume, EMA, supply and demand. If you found this video is helpful, you can check more stuff in the description. Thanks for watching. See you next time.